In this video, I'm going to be teaching institutional candlestick delivery, and this is the kind of video you want to sit down and watch, get to understand what I'm going to be saying on this video. Because when I'm done at the end of this video, you can never, you will never see candlestick the same way again for life. You will see beyond just candlesticks. All right, so that is what I'm going to be teaching you in this video. And like the kind of trades you will be capturing is going to be very insane. They are going to be exceptional kind of trades you're going to be catching. So sit down now and watch this video. And if this is your first time to this channel, this is the kind of channel you want to subscribe to, because I'm going to be teaching you the things you've never heard, the things you've not learned anywhere, the things you will never get for free. Okay, the things you've never heard anywhere, and you will never get them for free anywhere. I'm going to be teaching you right here. You're going to be learning those things. So do yourself a favor right now as I'm talking. Destroy that subscribe button for me. It's not going to cost you anything. It's not going to cost you a dime to just tap that subscribe button. That's all you need to do. Okay, do it now. That's for your own favor. I'm already a profitable trader. Do yourself that favor. If you want to be profitable, you want to be a profitable forex trader this year, 2026. If you want to be a profitable trader this year, then subscribe, because I'm going to be teaching you, holding your hands and teaching you how to become profitable. Okay, now without further ado, let's quickly proceed with what I have for you. So institutional candlestick delivery refers to the method, the systematic method in which institutional traders, the big institutions, commercial banks, hedge funds, move the money in the market. Right? It's just beyond candlesticks patterns. Now, these are things they do. When they do these things, you can clearly see that, okay, they moved like this, they moved like this, and you can use that information to your own advantage. So I believe that you've understood what it means. If you've not understood it, replay this video. After watching it, replay and watch and get to understand the context, get to understand the content of this video. That is if you want to be profitable trader. Okay, that's only for people that want to be profitable. You rewind and watch until you can understand it. Now, candlesticks don't just form on the chart. A lot of people make that mistake. They think candlesticks are just candlesticks. Candlesticks don't just form. These are actions of institutional traders. So quickly, I don't want you to look at candlestick for just candlestick's sake. I want you to look at candlestick from a different perspective now. I'm going to be pairing candlestick with key levels because it is very vital. Candlestick reacts to key levels. All right. I'm going to just use this candlesticks here for example. Now, the same candlestick you see on the daily time frame is the same candlestick you see on the 1 hour time frame. The difference is the time frame. Now, on the daily time frame, the candlesticks on the daily time frame tell you what happened, all the buys and all the sells that happened on the on the 1 hour, the 15 minutes, 5 minutes, the 4 hours. All of them is what this candle represents. All right. So you see one candlestick on the day. All right. Look at this one candlestick. Told me that the bulls were dominating the market most of the day. So all your buys and sells, everything happened in one candlestick on the daily time frame. Now, this daily time frame candle is stronger than the four H4 candlestick, 1 hour candlestick, and 15 minutes candlestick, up to 1 minute candlestick. This one has a higher chance. If you see a bullish engulfing here, just like this, it has a higher chance of going bullish than your 1 minute bullish engulfing candlestick. Right? So we need to respect those time frames. Just a quick note. I'm just going to quickly do something here to let you know how market structure works. This is market structure. When price make a higher high, we expect a higher low. After the higher low, we expect a higher high. After a higher high, we expect a higher low. After a higher low, we expect what? Another higher high. Now, until price breaks this low, that's when we can, until price breaks this low and come like this, that's when we can say, okay, this is a bullish trend. But otherwise, so far this is above this level. We're looking for key level, we're looking for buy opportunities only. Price needs to take out these lows. So even if price did some sudden funny movement around here, just do some random movement, so far it doesn't break this higher low, then we are still in the bullish trend. Okay, that's a simple pure price action way of identifying a bullish trend. So first thing, you need to look at these candlesticks, all right? I'm going to pair it with key levels, but first you need to understand this thing. So you see this level here. Until price breaks below this level, we are not counting this a bearish trend. I want to see price break below this level, maybe test it on the lower time frame, like the 1 hour 15 minutes time frame, before continuing downwards, before I can clearly say that this market is bearish. But like this, we are having a bullish market structure. This is a bullish market structure. So based on this, I'm going to count this as an uptrend. All right. So everything that will happen around this level here, I will look for only bullish opportunities until price breaks below this level here. If price does not break below that level, I'm not looking for anything bearish opportunity, right? So here you will be able to see another opportunity here. So the next day, once I see this, the next day you want to start looking for bullish opportunities. Now this market here, it's where you look for your buy. You buy here, right? You look for the buy there. Now, if price comes back, want to see this price breaking below this level. Okay, I want to see price closing a full candlestick closing below this level for me to count this market a change of trend. So far, this is above. I'll be looking for bullish opportunities. Now, it will interest you to know that this market actually bought. It gave this bullish opportunity at the end of that day. You understand? Now, we do have another candlestick right about here. You see this? You're going to be still looking for a buy opportunity here. And I'm still going to look for buy opportunity here. Remember, we are going to be buying this market until we get a close below this candlestick. So we are going to buy here, and also buy here. Because why? We've not gotten any candlestick closing below this level. All right. So since there's no candlestick closing below this the week of the previous day, that means you're going to consider the market bullish. So you're going to look for this buy here, look for buy here, look for buy here, and also look for the buys here. All right. Now you're also going to be looking for another buy. There's still going to be a buy here. So on this day, you will look for buy at this point. You see here. If you go to the lower time frame, you will see these buys I'm talking about. But for now, let me just finish. Yeah, I'm going to show you on the lower time frame, so you see for yourself. Look for a buy here. Now, when you start looking for sales until this happens, you see that price closed here, all right? Then instead it closed below. So once price closes below this level, now my trend has changed. You feel me? Trend has automatically changed. Now in a downtrend, this is what you have to do. You get a lower low, you get a lower high, you get a lower low, you get a lower high, and you get a lower low. So until price breaks above this lower high, you see this, we'll get a lower low and a lower high. Until price breaks above this level here, you are not going to count it as an everything happens below this level here. We'll be looking for sell opportunities. See, look at here, you look for your sell. You understand? Until price breaks above this level, we are still in a downtrend. You feel me? We are still in the downtrend. So whatever you're doing, it will be what bearish opportunity. So in that case, I'm going to be marking the highs. Now, these are the higher low here. I'll mark from this high here. Okay, I'll mark from this high here, and I'll mark another high here. So I'll look for bearish opportunities here, and I'll look for another bearish opportunity. I'll look for another bearish opportunity here. You see where I'll be looking for the bearish opportunities. See here, you look for bearish opportunities here, you look for bearish opportunity here. Now, this alone is crazily massive. This is a massive thing. You understand? We'll go to lower time frame and you will see for yourself that all right, let's much of the talk, let's go to the 1 hour time frame. Now let me show you how it works. Okay, on this day, you see that this is a support level that is this point is a support level that you can see that this level here was a support level and it was crazily beautiful. You see how price made a morning star candlestick. That it was amazing. Now, if you go to 15 minutes time frame and look at it, and you don't see where to place your trend line, go again to a 5 minutes time frame. You will definitely see where to place your trend line and catch a very clean trade. All right, look at it, very beautifully, fantabulously. Like this is a crazy trade opportunity that you would have killed. Just one thing, just put your Fibonacci, the trend line, and take it all the way up. This alone would have given you 1 to 8 raised to the word on a platter of gold. Just understanding that how institutions move the candlesticks. Now that is it. You understand? Very cleverly insane. I'm going to also show you how to pair this with key levels, right? Because any strategy you have, key level is insane. It's understandable. Look at this. This is another trade opportunity that you could have taken. Gave gave 1 to 2. It was 1 to 2 weeks to the board. So let's look at this other side. You can see that price was actually giving you trade opportunities. There was a trade opportunity here. If you look at this, there was a trade opportunity here, and at this point there was a trade opportunity here. You see that he was absolutely bullish. He would be buying all the way up to this point. Now I'm just going to be showing you. Now let's look at when the trend changed. What happened? At this point, we are looking for buy. You actually bought. I told you that there was going to still be a buy. Even if the market wants to sell, there's still going to be a buy there, which is what happened here. Look at it. The market bought here, right? But then again, it just moved like this. There was a buy here. You can still buy at this point. If you look at the smaller time frame, you can see that this will give also presented a buy opportunity that you could have bought and taken small thing out of the market. But the price now went below and closed below that week of the previous day. So automatically, I start looking for bearish opportunity. At this point, you see that there was a sweet bearish opportunity here. This was a superly amazing trade. This was super amazing trade. You could have caught a very beautiful trade. Even if you go, this is the 15 minutes time frame. Even if you go to a lesser time frame, you will see a cleaner entry. All right. Now, the same thing happened on the Friday. It was Friday. If you go cleanly, okay, let me just quickly show you 5 minutes and let's go to 1 minute. You can see that it was amazing. It was amazing trade. If you look at this like this, you will see that it was amazing. The delivery of the candlesticks are just insane. All right, they are just insane. You can just do this and you're catching a lot of trades right here. So you understand what I'm trying to tell you guys here. Like you could actually capture trade opportunities with just understanding what candlestick delivery is. You understand? Institutional candlestick delivery. Most traders just trade randomly without understanding what institutional candlestick delivery means. You understand? If you don't understand it, you will fall for fake out. This right here was a lot of fake out. You see that this is a fake out, fake out, fake out. Because why? You're on the 1 minute time frame, you're on the 5 minutes time frame, 1 hour time frame without seeing the delivery of the candlesticks happen on the higher time frame. So on the next video, I'm going to be showing you how to pair candlestick delivery with key levels to get even an accurate and amazing trade opportunities. So this is where you want to subscribe and turn the notification bell on because I want you to be the first to watch that video and use that information to start making money before others. All right. So in the next video, you're going to be understanding how to pair institutional candlestick delivery with key levels to get 100% accurate trade. If you're a trader that likes taking heavy risk, then you want to watch that video, because that's going to be helping you capture those insane trades that once you hit them, you've made it. You understand? So that's all for now. See you on that video.